Greetings and welcome to the Investing for Boomers special report on earnings season. My name is Ken Little and I've been writing about investing and personal finance for many years. I've written 15 books and posted more than 650 articles online on investing. But enough about me. Let's get to the topic at hand. Earnings season comes around quarterly and investors pay a lot of attention because of the valuable information that comes out. Every quarter, companies must drop their financial drawers and report their numbers for the past quarter and to date to investors and the SEC. Most companies operate their fiscal year on a calendar year basis, meaning their accounting year begins on January 1 and ends on December 31st. I say most because not all follow the calendar year. For example, Apple ends its fiscal year on the last Sunday in September. Go figure. For companies using the calendar year for their fiscal year, the first quarter results are expected in April, second quarter results in July, third quarter results in October, fourth quarter results and year-end results in January. These months are often referred to as the earnings season. Investors eagerly await the results of how well the company did in the previous quarter. Companies report complete financial statements including a balance sheet, a statement of cash flows, and an income statement. The income statement draws much of the attention because that's where the company reports its earnings. Earnings, without getting bogged down in accounting details, is the profit a company earns after all deductions for expenses. Investors expect earnings, and they expect earnings to grow over time. One of the key metrics investors look at is earnings per share, or EPS. Simply stated, the EPS is earnings divided by the number of outstanding shares. Fortunately, you don't have to do all this math yourself. There are many websites that have already done it for you. Let's look at what information you can find online for free. Morningstar.com is one of my favorite sites for information on stocks and other securities. Let's look at a quote from Johnson & Johnson, and I happen to know the ticker symbol for Johnson & Johnson, so we'll enter that in the quote box here. What comes up first, of course, is the quote which you asked for. And this is mildly interesting, but the information you really want to dig into is here in this section. First, let's look at key ratios. Key ratios are tools to help you understand the stock's performance over time. As you can see, this chart starts at 2005 and goes to 2014, which means all of this is real information, none of it's projected. And here's our earnings per share for Johnson & Johnson during this period. The last column, by the way, is called trailing 12 months, which is simply a way to bring it kind of up to date. You can see that by the chart here, their earnings per share have gone up and down and up and down, but as a rule have been on the upward trend. So we start out at 346 in 2005, and by 2014 we're up to 570. Very nice. Another place you might want to look is the financial statement. These are the statements that are reported to the SEC and are important for you to learn. This is the income statement, which is where we discover the earnings, and earnings and net income are essentially the same thing, because you can see here for a period from 2010 through 2014 how their in net income or earnings have gone up and down. So again, great information. You can dig really deep and find a lot of good things on Morningstar.com. Another one of my favorite sites is Yahoo Finance. This is a tremendous site with a lot of information, as you can see, quotes and lots of news about what's happening in the world of finance. But one of the features I like best is called My Portfolio. And My Portfolio allows you to enter stocks that you own or are interested in owning, and the portfolio will track their performance on a daily basis. So you can see the highs, lows, volume, so on and so forth. The charts, news, more information over here. Now, these are not stocks that I necessarily own, and I'm certainly not recommending that you buy these stocks. However, if you own stock or ETFs, you can put them in here, and this feature will track them on a daily basis for you. Even if you don't own a stock but are just interested in it, you can put it in here and keep an eye on it. Now, Yahoo Finance is strictly a news and reporting site. This is not a stock brokerage. You can't buy stocks through here, but it's a tremendous asset and one that's very worth considering. Many companies pass on a portion of profits, earnings, to investors in the form of dividends. Companies don't have to pay dividends. That's not a rule. A drop in earnings can mean a reduction in the dividend amount. If earnings drop too much, the board of directors may eliminate the dividend. Many investors look for companies with a long history of increasing dividends. There are some companies that have increased dividends every year for 25 years or more. Obviously, investors love these companies. In this elite group are household names with long histories, companies like Coca-Cola, 3M, Johnson & Johnson, just to name a few. Companies that stumble on earnings can anticipate a harsh reaction from the market. What does earnings season mean to the boomer investor? Boomers should be thinking long-term in their investment horizon. However, earnings season is a good time to check on your holdings. You don't want to be jumping at every bit of good news or bad news, but it's important that you keep an eye on earnings and other factors. One dip from quarter to quarter is not usually something to worry about, especially if the whole market is down. But a major change for the worse is something to worry about. Earnings season is a good time to review your holdings. Are they growing earnings? If not, why not? You should always have a reason to buy a stock. Does that reason still make sense? How is this stock doing relative to its sector? The bottom line, don't worry about minor changes in earnings, especially if the industry peers are experiencing change also.